Hello guys, welcome back to my channel. I'm your host Chris Davis. We're doing a different video today. In this video, I'm giving you guys an update on Warner Brothers Discovery. So as of this recording, this past Wednesday, Warner Brothers Discovery, the board has rejected Paramount's offer to buy their company for $108.4 billion. That's $30 per share. And instead, they want Netflix to buy Warner Brothers Discovery for $72 billion, and that's $27.70 per share. The board has been advising shareholders to vote for the Netflix offer and not to go with the Paramount offer, even though Paramount is offering more money. But this has led people to ask the question, why is it that the board of Warner Brothers Discovery want Netflix to buy the company and not Paramount? How is Netflix the better deal when they're offering less money for the company? So I've been looking at CNBC to try to answer this question, and their host, he did two interviews on this past Wednesday. One was with the chairman of Warner Brothers Discovery, Samuel D. Piazza, and then the other one was with Matthew Halbauer, CEO of Pentwater Capital. Pentwater Capital is a huge shareholder in Warner Brothers Discovery. So let's look at a couple of these interviews and try to figure out what's the reason why the board of Warner Brothers Discovery wants Netflix to buy the company and not Paramount.
Warner Brothers Discovery's board formally recommending today shareholders reject Paramount's latest takeover offer. Pentwater Capital Management CEO Matt Halbauer, whose firm is Warner Brothers Discovery's seventh largest shareholder, sending a letter to the board today criticizing directors for not fully engaging with that revised bid from Paramount. Halbauer arguing the $30 a share all-cash offer is economically superior, carries less regulatory risk than the Netflix deal, and could still improve, while warning the board may have breached its fiduciary duty. Let's hear from Mr. Halbauer now. Matt, thanks for joining us. First time not in person, but good to see you via the miracles of television. All right, what was the point of sending this letter? Why do you disagree with the board's assessment?
David, it's a pleasure to be here, and it's good to talk to you. The board has certain rights under the merger agreement that's signed with Netflix. And one of those rights is to declare an offer as a potentially superior proposal that would allow the board to engage in discussions with another bidder. In this case, in my opinion, Paramount has offered a $30 per share that is economically superior. It is superior in terms of regulatory risk. And I understand that the board has some legitimate issues with it, but those legitimate issues don't warrant giving Paramount the stiff arm and refusing to actually have a conversation. That's not how I want my board of directors to act. I want them to be willing to engage in a conversation with a party that has the ability to close a transaction and has indicated publicly that its $30 offer is not best and final, which screams to me that it is willing to pay even more than $30.
I talked to Sam DiPiazza, of course, the chairman of Warner Brothers this morning, about risk arbs like yourself, about the changing nature of his shareholder base. He didn't seem as concerned. I wonder, are you just another, shareholders coming along here trying to obviously benefit from what you think will be a bidding war? And does your vote really matter at the end of the day, Matt?
It may or it may not. We have the ability to vote for who represents us on the board of directors. We have the ability to vote for if we want the Netflix transaction or not. We are a small voice, but I think it's important for the board to at least hear our voice as the seventh largest shareholder, because I think what they're doing is wrong. If Paramount goes away, then it is a lost opportunity. Now, hopefully they won't. I actually don't think they will. And I just want to make sure that the board, if Paramount comes back, doesn't do something that would truly be destructive to shareholder value.
Well, I do wonder then in that vein, you know, and I've noted this, and I think you have in your letter as well, this reliance now on a sort of a new argument to a certain extent from Warner Brothers about the danger of leverage at the combined company, the idea that somehow its business will be dislocated during the period of time that Paramount is, you know, not yet bought it, and could even decline to the point of a material adverse change. What do you make of that argument? And doesn't it seem to say it doesn't matter how much you pay, we still have this issue, because that issue wouldn't go away if you raised your bid?
Well, first of all, I think the argument is specious. If you look at the amount of debt that Netflix is going to put on this transaction, it's $59 billion. If you look at the amount of debt that Paramount is going to put on the transaction, it's $54 billion. So it's actually less than what Netflix is going to put on.
Yeah, but Netflix is an investment-grade rated company, to be fair, and Paramount will be a 7 times levered piece of junk, not the company.
The way I think about it, David, is that the Ellison family are AAA rated, and they have a higher credit rating than Netflix. And so I do think it's specious, because the idea that Bank of America and Citibank are going to fall down on a contractual obligation to finance the debt when you're going to have over $41 billion of equity that's going to be put up by the Ellison family, as well as their partners in the Middle East, which are, really have net worths even greater than the Ellison family, is wrong. That's just not going to happen. And that's not a legitimate risk factor to turn down this deal, especially when, by the way, they could have said this last time, and instead it looks like they're digging into their pocket to come up with something brand new, moving the goalposts.
And here we go again. We're back with David Faber, who joins us once again with a special guest. David.
Thanks, Becky. Yeah, we're running it again. Of course, Sam DiPiazza is the chairman of Warner Brothers. He joined me on the first time we got a 14D9 from the company explaining its thinking as to why it was sticking with the Netflix deal. You joined me again, and I very much appreciate it. Thank you, Sam.
Yeah, thank you for having us.
All right, let's get into it. What this time, Paramount addressed a lot of what you and I discussed the last time you were sitting here, namely the lack of a personal guarantee from Larry Ellison. But you seem to have, at least in their opinion, come up with any number of other objections. What, at the heart of them, is the case here that you're making as to why you continue to reject Paramount's offer?
Well, again, thank you for having us here. Let's start with the fact that we have a signed merger agreement with Netflix. It's a compelling value, a clear path to closing, and protections for our shareholders if something stops the close, whatever that might be. Yes, Larry Ellison stepped up to the table, and the board recognizes what he did. And that was a major change in their position. But you asked me the question when we were together before. What if Larry Ellison guarantees the debt, increases his price? What are you going to do? Well, and I think I answered the question this way. The equity was critically important. But there were other matters, not just the break fee, the $2.8 billion that we're going to incur, but the operating opportunities, the refinancings that we have to do. There were significant other issues that we were going to have to deal with. And ultimately, he didn't raise the price. So in our perspective, Netflix continues to be the superior offer, a clear path to closing, and we believe protection for our shareholders. We all know, and I think I also said it that day, a deal's great. Closing's better.
Closing's better, there's no doubt. And there are plenty of people, though, who believe that Netflix may be in a more difficult position to close, Sam, than is Paramount, in part because of objections of European regulators. You clearly don't believe that to be the case. Why not?
Well, I think we continue to believe that both of these deals have a path to be approved by the DOJ, by courts, by Europe, by the UK, by LATAM. They both, and I think the word I used last time was that we were highly confident that they could get approved. We also understand that both of these deals could have challenges. You're merging studios. You're going to have a huge linear business in the P-Sky transaction that will dominate distributors. And you've got streaming being combined. So the board's job is to look and say, can these things get done? And if they don't get done, what happens? And because a lot of these deals find regulatory challenge. And we think it can get done, but we have to be prepared for what happens if it doesn't.
And that gets back to some of your objections here in terms of what you say are the liabilities that will be taken on by the company, that is Warner Brothers, and if in fact the Paramount deal didn't happen, would reduce the reverse break fee to a point where it's not worth it.
But David, in the large majority of cases, when an overbidder comes in, they take that break fee and pay it.
Why didn't they make it clear? Have you asked them to make it clear in terms of the $2.8 billion?
No, we're not in dialogue with them.
You're not in dialogue. Have you spoken to David Ellison at all?
We are.
Of late?
You understand this probably better than anybody. There's serious restrictions in conversations. We have a signed deal with Netflix.
But if you were to believe it could lead to a superior proposal, it doesn't even need to be superior.
We have to start the process.
And you've chosen not to.
But we haven't decided that it would lead to a superior. They had that opportunity in the 7th proposal, the 8th proposal, and they haven't done it. And so from our perspective, they've got to put something on the table that is compelling and is superior.
But I do wonder, and Andrew raised this earlier, with the new objection, Sam, that you're focusing on, the idea of just of the leverage of the combined company that is Paramount and Warner Brothers, and the fact that, at least as you guys say, sometimes you see that risk inherent in an LBO structure exacerbated by the amount of debt and the fact that sometimes financing sources can go away on you. That wouldn't seem to go away as an objection regardless of how high they raise the price. In fact, I would argue it could be a larger objection given the leverage ratio will only go up. So aren't you kind of saying you've got no chance here, Paramount?
No. There are paths. But let's start with, we have a compelling offer from Netflix that is a $400 billion investment-grade company and with a clear record-setting termination fee. Now,
I get all that, but what are these paths that you're discussing then if you continue to say, well, leverage buyouts are risky in their nature?
I'm not going to do their deal for them. And in fact, we have a deal with Netflix. But the questions that they have to deal with is how can they give us certainty that they will close?
They haven't done that with a personal guarantee from Larry Ellison for the equity?
That gets the equity to the table, but the entire sector is under stress. And remember, we're 18 months, 15 to 18 months from closing. Financial markets can change. The market conditions generally can change. And the media business, particularly the linear business, is under stress. So what happens if at that point they decide, we're just not going to close?
Well, that doesn't really happen. I mean, you're talking about Wells Fargo and other major banks here, and Larry Ellison, one of the richest men in the world. I don't understand exactly why this board... There are those who would say you guys now are just trying to figure something out here that you can continue to reject them. How do you respond?
That's unfortunate because that's not the case. We would be very open to do a transaction with Paramount. Adequacy of equity backed by Larry Ellison.
You got that.
We've got at 30, which is really not 30 because we've got at least $4.8 billion of costs we're going to incur that we will eat if they don't close.
Yeah, but I mean, $27.75 is not even $27.75 anymore from Netflix. It's about $27.40, and then we add in the value of global networks. Once again, the board has not given its shareholders any sense as to how you view the global network spinoff. My parent company is now public, Versant. Yep. It hasn't gone well the last 2 days. I'm sure you just heard me discussing this with you guys. Global Networks is not worth much of anything if you assume a Versant multiple. What gives you the confidence that it's going to even equal anything that would equal the Paramount deal when added to that $27.40 from Netflix?
Well, with all due respect to CNBC and all due respect to Versant, which are both great brands and great companies, and Versant is going through the natural transition from a cable-dominated shareholder base to a new shareholder base. Discovery Global is different. It has a lot more scale,
It does, but it has a lot more debt, too,
It does
Sam.
have a lot of debt, but a lot of that debt can be discounted and bought back. It is long tenured debt. It has more cash flow. It is a different company. Now, what's it worth? The market's going to have to tell us that, David.
They are. But why aren't you guys telling us?
We will have to eventually address that. But I think at this point, our view is it is sufficient to make the Netflix deal superior, considering the risk of the Paramount.
Your shareholders are going to obviously have a chance to make that decision based on the shareholder vote. Still late spring, early summer?
That's our projections, late spring, early summer.
Your shareholder base has changed significantly. I talked to one of now what is your largest shareholders, Pentwater. They own about 50 million shares, seventh largest holder. They think the Paramount deal is a better deal. And I can't imagine that there aren't others who agree with them in the sense of just a value perspective and the fact that at least at Pentwater they believe that the antitrust investigation in Europe is going to be very problematic for Netflix. Aren't you concerned that you're going to have a lot more shareholders like that, given the change that's taken place in your shareholder base in the last couple of months?
The shareholder base has changed, but not as dramatically as you're suggesting yet. And so there are a lot of ARBs and others that have entered into the stock, but a lot of our longs have stayed with us, and the indexes have stayed with us. And so in our view, we have to make that case, and that's what this 14D9 is about. What transaction? We got a signed deal with an investment-grade $400 billion company, $27.75, large majority in cash, with a path to closing and a $5.8 billion break fee that, frankly, has no challenge against it. And we have to compare that to a acquisition that is highly levered, that is a much smaller company that basically operates below investment grade today. Amazing step by Larry Ellison to guarantee. But we then have to look at what will happen to our company over the next 18 months. We can't do affiliate agreements the way we did before. We can't refinance our debt. We have a bridge loan, junior lien loans. There's billions of dollars at risk there. And they have reasons for their limiting us, and we respect them because they're levered. Netflix doesn't have that problem. Each of these transactions, in one case, the operating issues, you have problems on the P Sky, you don't have it on Netflix. The financing issues, problems on the P Sky, not on Netflix.
All
so
right.
our view is...
You've made that point. You make it again. Obviously, shareholders will read it. And finally, real quickly, I mean, to those who just say, you just won't do a Paramount deal. You just won't do it. You don't like them. It has nothing to do with economics. You say...
That's nothing further from the truth. We have talked to them now since September.
Yeah.
We've given them lots of input on what they needed to do to change. At the last minute, they went to $30, and then it was after the last minute
I know we talked
that they
about
guaranteed
that.
it.
But you haven't talked to them since, obviously.
We cannot talk to them.
Sam, thank you for being here and, again, giving us some senses to the rejection as well. I don't know that whether we'll be doing this again, but I certainly hope you'll join us.
I think it's going to become a habit.
It may be, but I enjoy it, and I appreciate you being here.
Thank you,
Sam DiPiazza is the chairman of Warner Brothers. Joe, I'll send it over to you.
Okay, you guys, we listened to the interviews. Now, honestly, I can't think of a reason money-wise for why Warner Brothers Discovery wants Netflix over Paramount. If we're just talking about money and economics, Paramount's offer, it is bigger than Netflix. And if we're going solely based on that, then Warner Brothers Discovery should go with Paramount because they're offering more money. But I think there's a creative difference. And that's the reason why Warner Brothers Discovery, the board, wants to choose Netflix over Paramount. And if you think about it, it could be an economic reason too, but in a different way. Yes, Paramount is offering more money than Netflix, but I think in the board's mind that Netflix is a really good company right now. Streaming, we're only going more in that direction. And Netflix has really good content that they've made on their own. and they are very relevant right now with Netflix House and with football being on Netflix at certain times. And so that's made Netflix a very attractive company to be a part of. And Warner Brothers Discovery wants to be a part of all that. That's what I think. So if they go with Paramount, yes, they're offering more money, but it's another TV studio, movie studio buying out another TV movie studio, and Paramount's streaming platform isn't as successful as Netflix. And so with that being said, I believe that's the reason why Warner Brothers Discovery wants to go with Netflix. So if you guys have a different opinion, let me know in the comments section. If you like this video, please hit the like button, hit subscribe, share this video with all your friends, and all of you have a great day.